back to Living 808. It is our weekly tradition, Living Akamai with Kei Mukaigawa, and today we're learning an update on the real estate market and talking inflation.
Troy Wada is here, and we're going to talk a little bit more about our economy. If you recall, Troy has educated us on issues like long-term care, the importance of estate planning as it relates to your investments, and even charitable plan giving. This year is a pivotal one with lots going on. There are historically high stock market levels, mortgage rates are still up there, and it's an election year. We hear terms like inflation, recession, and people are wondering, where's our market at? So we thought it would be great to have Troy talk a little bit more about this in simple terms. Thanks for being here.
Thanks, Kay. Well, I'd like to start off by talking about inflation. I think here in Hawaii, that's something all of us can relate to because it's something that we see every day, whether that's going grocery shopping and seeing how much eggs cost, or to even book our inter-island flight to Kauai. Things are much more expensive now than they've ever been. Last time we talked about inflation, I used these examples of apples, which I still think is relative today. If you remember, in our perfect world of 10 apples and $10, if every dollar had to be spent on every apple, each apple would have cost $1. But what happened in COVID was that the government gave everyone bonus checks, and now, instead of having $10, we got $13 for that same 10 apples. That made each apple cost $1.30. But what got worse was that instead of having 10 apples, now there were only 5. Things like supply chains, computer chip shortages, etc., made each apple cost $2.60 when we still had the same $13 in our world. So even though we've seen things like the cost of cars decreasing, what you see in this chart is that the services sector continues to see high inflation, which is represented by the red line, where inflation for goods is represented by the orange has leveled off. Please note that if inflation is reducing, it doesn't mean that things are getting cheaper. It just means that the price isn't going to increase as much this year as it did last.
You know, that's a good point. I think there's a misconception that lower inflation automatically means cheaper prices. I love that you always provide such great perspective. So I gotta ask you, what's your take on the real estate market?
Great question, Kay. I think what people need to understand is history. In the last real estate crash, real estate prices fell because people defaulted on their mortgages due to either overextending themselves and or being qualified for mortgages that, first of all, they shouldn't have qualified for. I don't think this part of history will repeat itself. This time around, some may argue that the consumer debt is at the highest level it's ever been. This is true, shown by this chart. As you can see, there is no doubt that consumer debt is the highest it's ever been since 2020. And mortgages make up the biggest percentage of the total. Now, the difference with what happened in the past compared to what's happening now is that although consumer debt is the highest it's ever been and mortgages make up the biggest percentage of the total, the interest rates associated with those mortgages are at the lowest we've ever seen. Many real estate owners are doing everything they can to protect that interest rate and will do everything that they can to hold on to their property. And having equity in their property is actually going to help them. Because we all know that real estate prices have increased significantly over COVID. Many homeowners are benefiting from that. So with that said, I don't think our real estate market will crash like it did in 2008. But I also believe that in Hawaii, it never makes sense to wait to buy real estate. Our prices will continue to climb steadily as it always has.
You know, and that's great. You brought up history. It's just a good reminder about why our market dipped so heavily in 2008. Totally different circumstances surrounding that. You talked about inflation, but what are your thoughts on a recession? I mean, did we avoid one?
You know, although no one can predict the future, I don't think so. Recessions are inevitable. They usually come every 7 to 10 years, but as always, each recession is followed by an expansion. Many analysts are predicting that if there is a recession, it'll probably be a mild one.
Thank you for your insights and for being here. I've always believed that knowledge is power, and it's so important that we make decisions based on our knowledge and not just emotion. If you would like to expand your knowledge by talking to Troy or learn more about some of our real estate related topics, I invite you to give us a call or attend one of our upcoming events. We can be reached at 808-725-2000. We look forward to seeing you next week, Tuesday. Engel & Volkers Honolulu is here to help you live Akamai.
Awesome.
Good information. And I feel like, especially with inflation and just the cost of everything, it's such a hot topic these days. And so it's interesting to hear, you know, you want to hear, like, yes, we missed the recession, all is good. But now I'm like, okay, buckle up. Maybe I should check my finances, make sure I'm planning a little better. That's why these are really important. She really gives us a lot of insight on what's happening right now.
Yeah. And as you guys saw, the next seminar is June 8th, so make sure you guys log on to KHON2.com right after the show. We're going to have the website so that you guys can attend one of our seminars. Yeah, a lot of information to come.
Perfect. All right.